Hey, how you guys doing? It's the Market Sniper. Glad to be with you. To be with you is nice. Okay, yep, there's stuff happening. Gold is moving. Gold is indeed moving. Yes, indeed, we love it. Gold is tripping up and away. We've got a big level, $4,000. Will it happen today? Let us know in the chat, which I am watching and observing. Our number one fans, go in there and let us know. Is it going to do it today? We want to know. Is it going to happen? Are we going to be celebrating? It feels like yesterday that we were sitting perched on the 2000. The man who told you once, twice, three times a lady, you break the fourth time, beautiful little fractal winding up, sitting on the lowest point was sort of 2011. And here we are. Here we are sitting at 3,900. Time for a little bit of screen action. What do you say? Let's make sure we've got the right screen showing up and go, you guessed it, to, we don't want that one. Let's move the live stream right to where the charts are and show that. Let's go. Entire screen share. So we're going to have a look at where gold, but I've got a lot of other things, a lot of confused perceptions that need to be rectified in my worldview. We've got a lot of confused perceptions that need to be rectified. Let me see now. Are we actually seeing a gold chart yet? We're seeing a platinum chart. That's a good start. Yep. Okay. We're checking it out. So platinum looking good too, by the way. We still hold out that one in the end of it all, if you compare where we started from at the lows of platinum, that platinum will actually have given you a larger percent, harder to buy, much harder to buy. Some parts of the world have VAT on it, like silver. That's also a tiny bit of a spoiler. Shine, focus on me, shine head. Yep. Okay, so let's go and have a look at gold because it's interesting where that is right now. It could be a key moment. But we're also going to be talking about nominal normie heroes. We are at 3,980, $3,980 for the yellow metal. Looking good, and we took out that little localized high. It just keeps doing it, friends. It keeps doing it. And there's a reason why this keeps happening. You go there, and then you have a little bit of a pullback, and next thing you know, it's not even doing major wind-ups. It's just trending out of there. It's just, yeah, we're just walking out. We just keep walking on up. And then you've had another smaller one there, a little dip down, and now a little bit of a shooting star. Maybe we'll dip a bit more, but it keeps walking out. It's looking great. We also want to show you the gold-silver ratio before we get into the juice of the topic, which is the nominal normie heroes that don't understand the truth of the market and where it is. We also want to talk about that gold. We're going to be talking gold versus oil aspect, why it tells you where you are economically, the fact that the one is running and the other one is not in a fiat and debt debasement time. And we're going to talk about the Nikkei and the Yen and why it's the other US stock market, US dollar equivalent, and which other market will be joining them of the first tier world in a similar melt up of the stocks. All the people are heroes, buy stocks, chase them, melt ups. It's not actually a melt up, even though the market continues to go up. In the correctly adjusted terms, it's in many instances re-rating down. In fact, I haven't found one where that isn't the case, including the NASDAQ. And the key trade, as we said in February, was gold. Anyway, let's have a look at, just before we leave that, let's have a look at silver just to see where it's going. We're taking stock as we start the stream where the three main precious metals are. Let's clean our face a little bit and draw some lines. So this is typical of what we call a continuation structure. It's a broadening, descending continuation structure. Let's draw it again a little bit better. That is a splitter, a line. It may bounce on the splitter. You're seeing hammer action. Or if we get a bit of weakness come in, it could extend to the low one more time. But the expectation is in due course. For now, this breaks. Don't forget, we've still said also inside of that, we're having to cope within this realm, that potentially there's still one knockback at the $50 mark. But I want to say the $50 mark of 1980 and 2011 ain't the same dollar of the $2025. No, sir. Being a millionaire in dollar terms is nothing nowadays, I'm afraid. You want to aim, you want to be aggressive, you want to aim a whole bunch higher, because those dollars are cents in yesterday's dollars. They are. Okay, what are we talking about when we talk about our nominal normie heroism? Well, here's what we're talking about. Let's have a look at platinum before I get into this. This is a difficult one. The key thing that people don't understand about the environment we're in. We'll have a look at platinum first and go back to it. Again, very close to highs, stacking up, marginally higher high there. This is the buy line coming under platinum. Really hard to get over. Now, many people say, but rising wedge, bearish, rising wedge down. Not if silver and gold are going up. Rising wedge can be melt upish, very melt upish. You have to have context to understand this in terms of it. And we've covered it before on this channel. I'm watching your comments as they come in, says Mr. Smith, Goldilocks. Some pointing out that certain futures have already traded through the 4,000 market. How long until Japan intervenes to protect the yen, or do they just let it collapse? The answer is they're broadly going to let the yen continue to lose value. We're going to be talking about the USD JPY. We're going to do that as well. Let's do that now. In fact, USD JPY. So inside our community, we've been awaiting one of two key events to happen. On this overall position. And that is, there's something coming of a major move. That means a fast move. That's what interests us. When a market moves quickly away from a level, you can have tight stops and expansive rewards. That's what HVF traders focus on. A low volatility period, you've had it here. This is where we're at. You might still be in that channel, or something bigger is happening and you're running these localized highs. That could be a lot bigger. So if we highlight this, you were in an environment where you could be in a head and shoulders, note the head and shoulders draw with the big M, and you could be in something completely different that is bullish. We don't have a strong view either way. It's getting stronger to the bull side, by the way, for us overall, it could still sell off and come down. We short it for the downside if it were to do that. However, right now, our framing is different. Instead of the bear, we actually have the following. And we say, on the USD JPY, the trade of the moment for us is the potential continuation structure that we may have, which starts on that hammer. And it looks something like that. Where does that go? USD JPY II 171.90. 171.90 coming up. You're getting in really fairly early with us. I point out there was a Sunday gap on the Eastern session. We were watching that as it opened. We were up late watching. I like to see how a week opens. It's very rare actually on a weekly open when people are re-risking for the week, some of which they will carry overnight. They don't like to carry over weekend. Which way the market is going? We told you the dollar could be firmer coming soon, and that's exactly what happened. The Euro USD gap down, the GBP USD gap down. The Dixie is actually basing where we showed you at that key chart. We put an orange square around the hammer, and we will show it to you again, because some of you might not have been here when we said it the first time. A certain degree of we're done beating up on the dollar. Now, what tends to happen when the dollar's a tiny bit stronger is that it's funding currency, the wholesale borrowing market where they borrow cheap yen on the other side of the planet, centered to casino America, super cheap currency, borrow, leverage, play in the casino, is that two things happen. You either at the end cycle where you have the carry trade unwind, that you get a couple of rumblings, but most of the time, you're in the situation where America is controlling Japan and seeing to it continuing to weaken its currency relative to America and increase its rates. What that does is it means the payback loans stay cheap. In dollar terms, what they have to pay back is not going up. In yen, the yen is not appreciating. But at the same time, what is happening on the yields is that the interest rates The differential, the cheap money used to have, you earned more in a treasury than what you paid for borrowing in Japan, is getting closed. That is getting closed. So they need the absolute weakness of the currency. And the fact that the long end of the rates is pointing to debt debasement. Debt debasement. Now, if we go to yours truly, the Market Sniper channel, and we have a look at all that he spoke about, this was some 2 years ago, cracking the code on Bank of Japan, debt and Nikkei, how to make it big, which included our calls that highlighted other videos, by the way, including our Professor Werner video, Harikari for goods and exports in Japan. The Nikkei is going to go up, the yen is going to get weaker, and the interest rates are going to get higher. This video is 2 years old, and 3 months before that, we were analyzing Japan's debt market. You're talking 2.25 years ago, 4 months ago, the Harikiri video, and then not shortly thereafter, the only 3 days old, our Prof. Werner video, which is now 2 years old, which you can all watch. Those are some of the videos. Now, it's interesting to me. It's very interesting to me. We do a certain amount of work, and then later it turns out everybody gets kind of interested in something all of a sudden. Everyone is now talking. So here are the current YouTube influencer memes that we will be addressing here. Everyone is talking about the difference in gold to oil. That's one of the things. Your influencers are talking about gold to oil. These are the themes. Right here, pink line. A lot of posting by your smart YouTube, all who have greater followings than us. Why gold and oil is stretching in relative valuation so much. Then they're also talking about, hey, a new high in Japanese bond rates. Oh dear. And then there's also a bit of the stock strength story, US stocks, Nikkei strengths. And then the other thing is the big exposure of the lie on labor. And we await the CPI exposure of the next lie. But anyway, let's deal with the first two over here. These are themes that with us, that's a year to 18 months old. We've even stopped speaking about it because we call them when they are happening, when they are going to start happening at the beginning. And at that point, nobody's seen them. The gold versus WTI. Let's cover this one. XAU, USD. We put it up. And why this is so important for so many people. There's your gold chart. Let's clean our face. Let's take our indicators off. And let's divide it by WTI. Now, we have charts in 2023 talking of this break as it was happening. We have charts. Let's go US oil instead. That is the WTI. We need a long history. And here's the charts you get. We have been doing this for quite a while, and we highlighted to many people it was the same as it was in COVID. We actually got a chance to make the same call twice. Let's just get that in reg scale and just get rid of that ridiculous spike if I can. Oh my God, that's going to be a nightmare to unwind. I hate that. Don't you just hate that? Okay, we can't do it. Back to log scale, and we'll get rid of the spike for a bit. We did this call, wait for it, we did this call when we said oil to below single digits. It's going to go sub 10 into single digits. It could even go 0. An outrageous call. We did it in 2019 mid-year. We did it again in August, November, and we stood on a stage in February. And that's what we called. We said that inverted head and shoulder in gold dollar terms is going to lead to a breakout. We thought it would be a normal kind of breakout where you ran from around 28, which was the time. We pointed out that this was looking very upside HVFE, and we said you're going to have a major deval in relative valuations for oil to gold. And what you got was a prediction that led to the CV19 events and led to our YouTube channel collecting 2 bans for medical misinformation as part and parcel of our everyday economic fare that we give you. Don't take the you know what. Okay, then we had oil be a major recovery. We actually traded that long after it spilt out of the falling wedge. We have that chart as well. It's worth covering this in detail. And we're going to explain economically what all of that actually means. Let's just leave the gold oil for a minute and highlight this for you. We did this. Here was the macro falling wedge. Let's go up to the 3-month. Maybe monthly will do. And we definitely, again, need to lose log scale. This was better than anybody could have hoped. We called this 3 impulse falling wedge. Let's do a straight line and keep it tidy. Straight line, 3 impulse falling wedge. And we said you're going to do a spiller, a thriller, when it was up in and around the 60s over here, that you're going to fall because you were at our capping, descending grind line that had already interacted once, twice, two places, but in the secondary zone, and 3 times, and this was the second touch at that zone, and they had just caused this little surge on an Aramco fake story. Iranian drone bombs Aramco. You know, don't forget they were also listing Aramco and handing the shares to all the people, making them buy them so that they could be the bag holders for the collapse in the Aramco share price when oil collapsed, so that they could buy all those shares back that they gave to the bag holders at the bottom of the market. You see, that's how it works. The insiders screw the outsiders perpetually. And this was the capitulation that ended up being the crisis that we called. We were then long, heavily long here, and we called the top at 129. We have a great history with oil, in actual fact. In that spike, there is smaller time frame price behavior. It's on our case study on the Market Sniper. So what are you learning? Well, I want to show that this is not just, it's not meant as a brag sheet. We get plenty wrong too. What it's meant is understanding oil's relationship in the economy. What actually happens is oil is like a thermostat. When everyone's feeling good, they skim. It's the Rockefeller tax. They own it. Chevron is Rockefeller Inc., as are many of the other oil companies, and Rothschild is Shell, BP, you name it, the others on this. And they both collectively own cross holdings in all of them. And if you go, again, as I say, to our case studies, where you go results on our website, you will see the full story. But what they do is when they are skimming, when everyone is flush, they then drop the thermostat when everyone is wrecked. So it is a very good marker for economic activity. It is a very good marker for economic activity. Let's test that speed. It shouldn't be doing that. That's the Market Sniper. Hold on. There we go. Let's try again. Results. You can go to sleep. So what it does is it actively allows them to ratchet it down when the consumer is wrecked. Consumer wrecked, consumer drowning. Okay. Take the boot off the throat a little bit. They're getting beat up. And that's what oil kind of like is. Now, you've got to also realize that in dollar terms, we are having a fiat and debt debasement cycle. And this is, you've never had on the scale that you are having currently. You are having a fiat and a debt debasement cycle on an extreme scale. If you want to see these charts and have a look at this in more detail, go to the full case study. I will be showing you it where that 129 top call came in. So what actually is now going on is we are getting an indication on how strong people are. Let's go right down to real proof of real trades, by the way, as well. Many people don't. That was the Aramco stuffing that absolutely convinced me that there is no way they weren't going to be doing that. This is the literal high over here. We did it for you. No, when it broke down in a bear flag. Sorry, we broke down in a bear flag and we took the early shorts on a bear flag. That was at 64. That was on the way down. That was before we had zero. I want to show you the post trades. You can load all these charts up for yourself. There's all the gaps. There's all the winners. Saudi not doing a deal. All of these are there. There's the proof of the actual trades. you can see that we really trade. Go, 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 go. Let's get to the move back up. There, by the way, was our inverted head and shoulders draw over here that highlighted, let's cancel that, that highlighted the reversal structure that then led to the super spike. So we have real good history with oil. It comes to the party for us because we understand it. We feel we understand it. This was the top call on a broadening structure. I want to just show you that because many people don't give us credit. You made 129.47. That was a great short on a splitter of a broadening structure that was ascending. That means it's getting more volatile and leaning up on a bull pole. It was the beginning of the end. That literally was the top of oil. You are sitting barely hanging on at 60 today, more than half that. So what does that tell you about the economy? Stagnation for the main street man of the economy, not the AI billionaires building server factories, pumping their stock. For Main Street, two-tiered system. You're in the wrong half of the aeroplane. You're in the cattle class. You're not in the first class. I'm sorry to tell you. It is what it is. I didn't design it that way. We all know it. There is that chart, very clearly annotated. Go and have a look. We put some real effort. You will learn about technical analysis a lot as well. It went super low vol on our splitter. It was an absolute gift of what it was doing. Failed on the marginally higher high and a complete round turn, and then went back to low vol. This was an absolute gift of the beginning of the end top call at 129. So we called, and in the mid 60s, 2 single digits, and called the top again on the way down. So oil plays our game. So what happened in oil? It came a second time, and I thought, man, are you getting sloppy? Is this all you can see? So let's go back and do gold oil again, because we did the subprime part, not the subprime, the CV19, if you'll forgive me. And then we did the exact same thing again. We had the exact same thing again. Let's get that out the way and let's rescale. And everybody is now waking up to the extremity. Everybody is now waking up to the extremity that is the gold to oil second inverted head and shoulders that we called again. There was your armpit, there's your armpit, there's the left shoulder, there's the right shoulder. I'm still on a monthly chart. Here's where we said that's the break. It feigned and broke the neckline, pulled back and is running. So everyone talking about this right now, they're talking about a reversal that actually started in May 24. You triggered April, May 24. You came back for a little revisit. You've already made the bulk of the first targets, had a 3 rising method. This is a technical structure. 3, then a pullback, and then another leg up. That is continuation. Remember, it's an overall reversal. So it has a target, but that doesn't mean that's the top. That means its first leg is done, okay? You're talking about an overall reversal. And what that means, economy weak, a true reserve asset is being sought as fiat and debt that goes hand to hand like Siamese twins is going and falling to pieces. And many people now don't get this. They want to call the top on the Nikkei. You can see our X when we, in terms of our, we disagree. They want to call the top on stocks. It's not a melt up divided by gold ounces. Here was the stock. This is another misconception. To be the melt up, you're the best market in the world and you're making absolute new highs and you're running in a parabola. And you're the best. The tech market, IXIC, in the lead up to 99 was 100% a melt up market. So if we go back there and we show you that, that's your melt up market. There was nothing else that was doing anything like it. And it went in a very short span around sub 1390 to 5,000. Literally, July 2009, you went from 1390 low at its extreme in a little bit of a correction to 5,000. So 1400 to 5,150 actually. 1400 to 5. That's a 4x in about a year. That is a melt-up market. And even when we divide that by gold as a unit of account, it's still a melt-up market. If you were in gold, you weren't making the same money as being in Cisco. It was the dominant place to be. That is a legit melt-up definition. What's been happening, and you can see it even here, even when we divide by gold, your low volatility in 94, you're outperforming gold, you're doing this, and it's getting steeper and steeper and steeper, and you went from around 1.82 ounces to 19. That is your melt up, 100% legit melt up. That means there's no other market that's better than you, and you're making new territory. It's not you're bouncing from a low. This can never be a melt up because you've been here. It's when you're in an all-time high and you're going up steeply in a parabola. So where are we today? And this is where the nominal normies are all excited about equities and stocks. Unless you're talking miners, I don't care, because you're going down relative to gold. You're going down relative to gold. You see, what's actually happening, beautiful people, is we've lost all basis of account. We are in the early stages where we don't have a basis for accounting. There isn't the measuring tool anymore. The dollar is not it. The dollar against other crap fiats lost 15%, even lost 42% to the ruble. It's not it. What do you use? Until further notice, you use XAU. That's what you use. You count your wealth in gold ounces. The equity market is underperforming and could spill. That's where our Dow Jones market then comes in. And we've shown you this on Twitter as well. Yes, there's no dividends invested in this image. There's no dividends reinvested in this image, but you are still in a macro broadening structure. You have now broken the 12 gold ounces to buy you the Dow. 1929, the end of the roaring 50s into the 60s, that's the beginning going into the 70s, the Vietnam War, 30s, 33, war follows, war always follows the debasement of the equities in gold terms. Where are you today? You are here, 2008 and 9, you did part down and you're doing a more complex leg down. Don't forget, you get a bounce there. Now, as ever you go wider, you get bigger bounces, more significant complexity. Back in the 30s, it was simpler. This took a while to happen. It went slowly at first, spilt, had a bounce, and then hammered out. Sub 1 ounce at the low. Sub 1 ounce of gold bought you an entire basket of the Dow. At the basement of the Great Depression, it was 1.88. Then it was 0.99. We don't think 0.69, I think 0.5 or less, because you will get an overreaction. People are getting hurt. That's what's happening right now. And your nominal normie friends are going to talk about their stock calls, or they're going to call tops on the Nikkei. We gave you the trades on the Nikkei. We said this is going higher and higher and higher. The Nikkei. Let's have a look at our Japanese friends. What is happening in Japan? The currency is debasing. What is happening in Japan? Understand what the currency debasement means. We gave on this channel long before everyone else is now talking about the Nikkei. We said you're in a macro inverted head and shoulder. Everyone said we don't believe in Japan and stocks anymore. They bottom called all the way. Bottom, 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 bottom. This time a bottom, and then they gave up. They stopped caring. And it came slowly up. We gave this right shoulder as it was happening. You are ripping to 74,000. Not what people are saying it's going to collapse to 24,000. But a part of that is on the currency that has to lose as much as the dollar, and in some instances even more. We've just shown you the upside HVF that is just triggered on USD JPY. It's still Toyota. They still make great cars, Land Cruisers, lots of things people want. Of course, there's a depressed consumer society, but the currency and the debt is debasing so fast that the other reserve asset, the Nikkei and stocks that will pay you as prices go up, a dividend at least, in higher amounts of yen as the fiat debases, it will hold some of its value. However, all these assets pale under the measure of gold, which is why we make things simple for everybody. Do you still see an inverted head and shoulders, friends? Do you still see it? No, you don't. What you should see is lower lows and lower highs. This is part and parcel of what happens. It is re-rating downside in an environment where there is full-scale debt and fiat associated together like two Siamese twins, debasing rapidly. The assets that might pay future yields and dividends are also going down in gold ounces, but less so. The harder the currency falls, the stronger the stock market will appear to look. All those bull callers look so smart and they're hero traders right now on stocks because of the double juicing of major debt and fiat debasement, especially in the countries that are the most indebted, that are doing the most debasement. United States, more indebted than Japan, but Japan probably the next. Yes, you heard me say that. I've run the numbers, add the unfunded liabilities in, and you'll get a better answer. Who's going to be next? South Korea and the Kospi, debasing fiat. But, you might not be interested in South Korea. That's okay. Let's just go and show you the Kospi. What is the Kospi doing on a weak currency? Well, it's also, surprise, going up. It's going up. Look at that move. It's gone from a low down here at 229 to 3.5 in quite a short time frame. That's 1st of April 25. You're still in the same year as a percentage move. Who's talking about the Kospi? No one yet. Wait till we get the next big theme that your influencers will all be talking about in 6 months' time, that we've been talking about for an extended period. The Korean won currency debasement moment is coming against all FX pairs. There is something geopolitically that's going to come, and it's going to moon that stock index because of the fiat debasement. But in real terms, how's it doing to gold? In real terms, how's it doing to gold? Again, a fail. That's why we keep it simple. This is a secular, one trade, key moment. You're going to sell too soon. You're going to be coaxed into selling too soon. You've probably got some ugly version of a head and shoulders that broke over there in the Kospi, even though it's ripping to the upside. Return move, rollover down, gold, gold, gold. Did you hear what I said? Gold, gold, gold. Silver, 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 as the gold-silver ratio is starting to show that it's going to go down on balance of probabilities. We warned that there was a possibility it might have if there was a demand-destroying event. It seems like for now, no demand-destroying event. We're just slipping away. Well, I'm only totally convinced of that when we run that low. That's when I'll do it. And even still, it still has a 5 or 10% chance they could bounce it at the 65 once if they created enough fear. But generally, once it starts trading through $50, it's going to rip a face melt. Platinum 2. That's where we're at. Forget all the guys that are talking about equities. These are like playing in apartments in a building that's collapsing. The foundational trade is the foundation of the system. The collapse of the debt fiat system is not the same as the collapse of a stock market. Stock markets go down, folks lose some money, margin gets people liquidated, a lot of retail guys get handed a loss, they start serving you coffees and being your local barista for a while, they eventually reflates and it carries on back up. A debt and fiat debasement collapse is a foundational collapse that leads to 90% hordes, poverty, welfare state, civil unrest, and complete contagion. If you don't have gold and silver ounces, you do not maintain balance sheet. If you don't have security, community, and optionality and freedom for these times worth places outside of the West that's going to be hit worst, you will be crushed. Right, I need to go. Click the link below, book a call. We will live stream again this week on these topics, but please understand this. The themes that everyone are coming to are the titles that we did on our YouTube where no one paid attention. Japanese interest rates at 0.485, we called for 1.6 on the 30-year. Now sitting at 3.32. Upside HVFs calling bottoms. Why? Because we had already called the top on the US debt market in 2020. And we said, you failed together in a synchronized leper colony. We were looking at Japan debt when none of these people were talking about it. If you want someone who understands hyperstagflation, where nominal normie heroes are all going to be around you and bear top callers on indices are going to be proven wrong time and time again because the fiat debasement is in an inverted parabola, you need to look here. The guys that spoke about it before anybody else, that are your HVF friends, and they are not your YouTube influencers that think that equities is the most interesting place. It is a reserve asset crisis. Oil has not gone up because the two-tier system has the normies wrecked. The retail is wrecked. The nominal normies that think they're getting richer because they're getting a little bit more money in their account, whilst the gold chart is doing this. I will finish on this key point. The gold chart is doing this, my friends. That is your dollar. That right there is your dollar. See that chart. Let me just pull it a little bit higher. My face is in the wrong way there. That is your dollar. That is the buying power of your dollar. And if you're not in America, yours isn't far behind and it's doing something similar. The yen is definitely doing that, and the euro's in the process of doing that. And we tried to explain why people need to understand this. 9 months ago, we were doing clever curves saying, you are here. It's all going to change very quickly. Gold's going to start going up ridiculously. And that's the sign that your fiat and the debt debasement is doing that. That's why the stock market's up. The Venezuelan stock market was the best performer. The Zimbabwean stock market was the best performer. But you don't want to be in it. Okay? Gold, silver, platinum, miners. That's it. Overweight. Ignore the rest. They don't understand. They don't understand. There is no basis or measurement of account anymore. It is a gold ounce. That's your message. If you like people who understand hyperstagflationary times, give you the phrase and really get it and make it simple for you and will help you build wealth that you can preserve in reset times. You check us out right here, right now. Buy a call and you buy a call. It's for free. Click and book a call is what I meant to say, and have a chat. It costs absolutely nothing. We'll give you all our time. We are the news before the news. We are the 2 years and 1 year before every other YouTuber, every other analyst on X is talking about the oil gold relative stretch, the Japanese yen rates and what it means. We are already understanding the next phase and analyzing it and breaking it down for people. Must go. See you later. Click a link, book a call. It's time you saved your balance sheet for this parabola of the inverted parabola, the slippery slope, slowly at first and then suddenly very fast. The bankruptcy came. Ernest Hemingway knows. You should know too. Till next time, I'll talk to you later. Bye for now.